Welcome to the Morning Download Podcast, your daily guide to personal finance, economics, and market insights, all in just 5 minutes. Get ready to empower yourself with the knowledge you need to make smarter money decisions. In today's episode, we'll cover financial losses from strikes, bullish run in cryptocurrencies, savings accounts, Biden's order limiting U.S. involvement with Chinese companies in sensitive technology, the impact of the Hollywood strike on California's economy, talent gap in the U.S. chip industry, Disney's decline in subscribers due to loss of rights to IPL cricket matches, the expected rise of Bitcoin to $45K, Coinbase's bond buyback program, SCP's appeal on XRP ruling, Bitstamp's discontinuation of altcoin offerings in the U.S., high-interest savings accounts offered by U.S. banks, and the wisdom of avoiding unnecessary purchases. Hey there, investors. Hope you're doing well. Let's jump right into the latest update. Yesterday was quite uneventful in the world of finance. The stock market didn't see much action and actually experienced a slight dip. But hey, it's all part of the game, right? On the bright side, the crypto market seemed to be feeling a bit more optimistic. There were signs of relief, indicating that we might be in for a bullish run. Exciting stuff for those involved in the crypto space. Shifting gears a bit, there's an ongoing strike that's really taking a toll on our pockets. It's costing us billions, and that's no small sum. We'll delve into the details later on in the segment, so hang tight. Now, let's talk about something that really gets our attention: making money. We've got some interesting insights on savings accounts that could potentially help you boost your finances. Who doesn't like making a little extra cash, right? That's all for today, folks. Stay tuned for more updates and keep those investor hats on. Catch you later. So, big news in the world of economy. The Biden government just signed an order that could impact American companies' ability to work with Chinese companies. The focus of the order is on sensitive technologies like AI, microelectronics, semiconductors, and quantum computing. The goal here is to prevent China from developing technologies and products that could potentially compete with the United States and its allies. Now, what does this mean for U.S. firms? Well, they're going to have to rethink their strategies. Doing business with China may not be as easy as it used to be. And on top of that, China's plans to create its own semiconductors might get a major blow. Interestingly, this move isn't about money. China is already a net capital exporter, so they're not hurting for cash. What they lack is the know-how. That's what U.S. expertise and investments provide. So it seems like the U.S. government is trying to curb China's technological advancements. Switching gears, let's talk about Hollywood. It's been 100 days since the TV and film writers' strike, and it's causing quite a stir, not just in the entertainment industry, but also in other fields. The strike has cost the California economy around $3 billion, making it the biggest strike since the disastrous one in 2007. This strike isn't just affecting the big names in Hollywood. Small businesses like restaurants, caterers, florists, and dry cleaners are feeling the pinch too. With fewer projects in motion, there's less work for everyone. The impact is even bigger when you consider that people in the entertainment industry tend to earn more than the average worker. So, when they're not working, it hits the local economy hard. With about 5% of the local population employed in the industry, there's a real concern that people may have to move out if things don't improve soon. In other news, it looks like COVID is making a comeback, and UPS drivers are expected to see some changes in their pay, with an average of $170,000 per year. And finally, there's a talent gap in the U.S. chip industry, but we're talking about microchips here, not the potato kind. That's all for now on the latest happenings in the economy. Stay tuned for more updates. So let's talk about Disney. Their fiscal third quarter wasn't exactly a success story. They saw a decline of 7.4% in Disney Plus subscribers compared to the previous quarter, which is worse than what was expected. However, it seems like things are still going decently for them in the U.S. The real blow to their revenue came from the Indian market, where Disney plus Hotstar lost rights to the IPL cricket matches. But there is some good news. Disney is following in Netflix's footsteps and cracking down on password sharing. They are also raising the price of their basic tier to $13.99 per month, a pretty significant jump of 27%. I guess they're hoping that these moves will help them recover a bit. On a more positive note, Disney's Parks, Experiences, and Products division had a solid quarter, with a 13% increase in revenue. This led to their stock jumping 2.67% after the bell. In our opinion, Disney could see a jump of anywhere from 5 to 8% in the next few months. The change in price, along with an exciting lineup of movies and their decision to take full control of Hulu, could help turn things around for them. Now let's talk about some major movers in the market. Axon Enterprise Inc. gained 14.01% after reporting earnings per share of $1.11, almost double what was expected. That's quite the surprise. Akamai Technologies Inc. also had a good day, gaining 8.46% after raising guidance and meeting expectations. On the flip side, Nvidia Corp didn't have a great day, with a decline of 4.72%. There doesn't seem to be a specific reason for this, but it certainly wasn't their best performance. Broadcom Inc. had its second consecutive day of losses, with a decline of 3.67%. It seems like they just followed the overall market trend on this one. And that's a wrap on today's market news. So, let's talk about investing in crypto. A lot has been happening in the crypto space lately, and it seems like the digital currency market is gearing up for some exciting developments. Here's what you need to know. Bitcoin has been making waves, briefly crossing the $30K mark. Some experts even predict it could reach $45,000 soon. Of course, this is not financial advice, just some interesting speculation to consider. On another note, Coinbase, one of the popular cryptocurrency exchanges, has launched a $150 million corporate bond buyback program. Many believe that this move will benefit the entire industry. There's also some legal action going on. SCP, a digital asset trust, is planning to appeal a ruling against it in a fight against XRP. Meanwhile, Ripple, another prominent player, is experiencing growth thanks to partnerships with financial institutions for international settlements. In the US, Bitstamp, a cryptocurrency exchange, will stop offering certain altcoins. This is something to keep in mind if you're an investor in the US. Now let's switch gears and talk about personal finance. If you're looking to grow your savings, some US banks are currently offering great savings accounts. In a rising interest rate environment, it's a chance to earn more from the interest. Traditionally, US banks have been known for low interest rates, but that's changing now. Some banks are offering rates as high as 5%. Here are a few options to consider. First, we have the Western Alliance Bank Savings Account. With an impressive APY of up to 5.20% and no monthly fees, it's definitely worth a look. However, keep in mind that this account does not come with an ATM card. Next up, we have the Newtek Bank Personal High Yield Savings Account. It offers a very attractive interest rate of 5%, with a minimum balance requirement of only 1 cent. Plus, you can request an ATM card, and there are no monthly fees. Lastly, there's the Basque Interest Savings Account, which offers a 4.85% APY. This account has no minimum balance or monthly charges. However, it's important to note that it doesn't support ATM or checking accounts. So, if you're considering investing in crypto or looking for a better savings account, there are definitely some interesting opportunities out there. Oh, I love this quote. It really makes you think, doesn't it? He who buys what he does not need steals from himself. This Swedish proverb is such a powerful reminder of the value of mindful consumption. In today's world, we often find ourselves caught up in the cycle of constantly buying things, whether it's the latest gadget, trendy clothing, or even just indulging in impulse purchases. But have you ever stopped to think about the long-term impact of these decisions? When we buy things we don't really need, we're not just spending our hard-earned money, but we're also robbing ourselves of something much more valuable, our financial freedom and peace of mind. Think about it. The money we spend on unnecessary items could have been used to invest in our dreams, save for our future, or even help others in need. So next time you find yourself reaching for that tempting item, take a moment to reflect. Do you really need it? Will it truly bring you happiness and fulfillment in the long run? By being more intentional with our purchases and focusing on what truly matters, we can break free from the cycle of mindless consumerism and instead build a more meaningful and fulfilling life. Remember, every dollar we spend is a choice. Let's make choices that enrich our lives rather than steal from ourselves. Thanks for tuning in to today's episode. We covered a range of topics, including financial losses from strikes, the bullish run in cryptos, Biden's order limiting U.S. involvement with Chinese companies, the decline in Disney Plus subscribers, and the latest news in the world of Bitcoin. Don't forget to subscribe so you can stay updated on all the latest episodes. See you next time.